Welcome back to the weekly podcast of Oriental Pacific Futures based in Kuala Lumpur of Malaysia. Well, this is Dawang here, and I'm one of your favorite market opinion leaders giving you on the weekly podcast covering on the FCPO prices trading in Busan, Malaysia. All right, last week, Friday, which was the data on the 5th of September, market actually closed up higher, and based on this weekly chart, okay, look at this weekly chart, and the November delivery month closed at a price of 2028, which is 2028 ringgit per ton. All right, last week we actually predicted that 2030 to 2050 will be a very strong resistance, and it looks like we are still holding this resistance for this week. But anyway, the reason for the market reversing up last week, all right, from a low of 1914, all right, as you can pay attention to here when I put the cursor, the line on this bar, the low was 1914. And the reason for market coming up was mainly due to the Ministry of Agriculture in Malaysia that announced on the exemption of the export tax in the palm oil for both months in September and October, and that actually it was considered as a good news and expedite on the export without any sales tax being levied. So the market turned up. And on this week itself, how far can the market go up? Let us use the all right, the Fibonacci to do a quick measurement, all right, a quick measurement like this, and changing it to the black color line, which is more visible. All right, and by expanding it, we actually look at the first market. All right, if we actually take the away all this unnecessary benchmark and add 33.3, which is the wanted correction here, all right, and 66.6, all right, putting it together, and let us save it as a default. All right, as you can see here, all right, the first correction on 33% moving up is should be going up to the region of 2,100 ringgit per ton, which was stated here as 2114. All right, from the weekly chart, let us move a bit closer into the day chart. All right, we can see very clearly that the market has got a potential, all right, to consider a recovery for this week up to the region of 2,100 or 2114, exactly on the 33% retracement target. All right, and of course, on the downside, if market were to drop down again, it should be moving back to the 50% range of last week climb up range. All right, and let us move into the hourly chart. All right, last week from this border moving up to the top, if market were to come down, it should be sitting here with a good support in the region of 1970. All right, 1970, which is somewhere around here. So to shortly conclude on this week, all right, we foresee that the market, if draw down, it will be sitting very nicely on the support of 1970, 1,970 ringgit per ton in the downside range. And if the market continues to move up this week, which is a very high chance, then 2,100 ringgit per ton on the top side should work as a very strong resistance. All right, so this is the summary for this coming week on the FCPO prices, okay, which is trading in the November as the active month. This is Dawong here, and I'm one of your favorite market opinion leaders giving you the podcast on behalf of Oriental Pacific Futures. Stay tuned with us and come back while we shall give you more powerful information on FCPO market. Thank you very much. Bye bye.